You do not need an LLC. An LLC is not the right answer for everyone. You need to have an honest conversation with yourself, determine where your business is and whether or not you need an LLC. But do not panic. By the end of this video, you will know the answer to that question. But before we jump in, I'm gonna need you to like, comment, and subscribe so you don't miss out on any of this wealth building information. Now, let's get after it. Tax considerations. So many of you are doing monkey see, monkey do. You're going out, open up these LLCs, and you're not taking into consideration the tax considerations. You know, income taxes. Many of you are not aware that when you set up an LLC and you become profitable in that LLC, you are going to have to pay federal income tax, state income tax, but you're also going to have to pay self-employment tax. You have to understand the full tax considerations of setting up an LLC before you set it up. It's very important because it's costing you money not to know. Let's talk about how to get paid from an LLC. When you are an LLC business owner, the way that you get paid through an LLC is not by putting yourself on payroll if you are being taxed as a flow-through entity. If you are a flow-through entity, meaning you're going to get a 1065 and issue yourself a K1, the way that you get paid is by just taking a distribution out of your LLC. And a distribution means transfer yourself money. Write yourself out a check. That's a distribution. You can take a distribution anytime. You can take one every day, once a week, once a month, once a year. But the key is that when you are an LLC, you need to understand how to get paid. You do not want to put yourself on a W-2 as an LLC owner unless your LLC is being taxed differently. Straight LLC owner, single member, multi-member, filing a 1065, distributions are the way that you're gonna get paid. LLCs limit your company benefits. Now let's think about that for a moment. As a business owner, one of the benefits we can get from our business is the ability to write off our medical insurance, to give ourselves dental insurance, to be able to have a 401k, and all the other benefits that you would normally get if you worked for another company that you did not own. But when you are an LLC owner, you're not allowed to write off your healthcare benefits like you would if you were inside of a C corporation. It's a different type of write-off, and it doesn't give you the big write-off that you normally could get. In addition to that, you're not able to add your spouse over to your health insurance benefits and have it sponsored by the company. It's so many things that you can lose out on and not really get the benefit of when you are an LLC. How about having a 401k? You're not going to have your traditional 401k inside of an LLC, especially taxed as a single member LLC. So think about the benefits that you want as a business owner. Are you limiting your liability as an LLC owner? Well, let's talk about that for a second. As an LLC owner, probably the reason why you set that LLC up is it's limited liability company. But if you are not running your LLC like a true company and you're still running it as though it's 100% just you, you might not be limiting your liability. When you own a limited liability company, you have to maintain separate bank account. Are you still using your own personal account for your business? If you are, you're probably generating liability for yourself versus limiting liability for yourself. When you are an LLC, you need to make sure you have separate books and records and that you're doing everything as the member of the LLC. And if you are not maintaining separate books and records, if you don't have a profit and loss, if you don't have a balance sheet, if you are still showing your LLC when you're filing your individual income tax return, are you limiting your liability or are you providing more exposure for yourself? Here's something else to consider. If you get into some situation where they are asking for your personal income tax return, and when they get it, they can flip through the pages and see that you have an LLC, is that exposure? It is. Now people know exactly what you're doing when the whole point of setting up your LLC was to have limited liability. So really think about it. Is it limited liability or is it more exposure? Are the costs and complexity of an LLC worth it? Well, let's talk about that for a second. When you set up an LLC, there's costs involved in setting up that LLC, whether it is with the Secretary of State in the state that you set that LLC up in. But in addition to that, some states have a franchise tax, a minimum tax. For example, the state of California has an $800 minimum tax. The state of Texas has a franchise tax. When you set your LLC up and your LLC is being set up in various states, you may think there's not going to be any complexity to it because I'm in a tax-free state, but not necessarily. Although you may not have to file an income tax return in that state and pay tax, the state revenue department is still going to depend on you to file your statement of information. You still have to have an agent of process listed, and all of this is costing you money. So if you're ready for the complexity, if you're ready for that additional cost, on top of the other costs you have in your business, then maybe an LLC is the right place for you. But if not, an LLC may not be where you need to be right now. Now that you know the reasons not to get an LLC, I want to give you the reason why you need to like, comment, and subscribe, because you cannot afford to miss out on any wealth building information.